Hi, this is Mark with your analysis for the week commencing the 28th of April. I just shown you in the first video how I do my analysis on a weekend, how I go through numerous time frames, different chart layouts, looking for trades. I then compile what I class as my A list. My A list are trades that I place at the market open and basically leave them. I then have a B list, and a B list are those trades that I will watch on a daily or 4-hour chart with a view to taking a trade if I am sat there at the time that it happens. Therefore, on this British pound dollar monthly, I am looking, if this candle closes on Wednesday, May Day, if we close here above this major area of support and resistance that goes back to 2008, my A-list trade for the week will be a potential short anywhere around 157.90. Because of the fact this trend line goes back 4 years, it was recently broken, you get a breakout, pullback and a further fall, and it's also 61.8 on a monthly chart, and lots of traders around the world will be looking at these areas. If you want to go counter trend, if this candle closes above here, then you start looking for pullbacks anywhere around 153.70 with a view to move back up. Finally, if this candle fakes out and we get a nasty spike, something like this, and it closes below 153.70, I will be looking for continuation move shorts. Moving down to a weekly chart, I have fibbed the weekly chart, and that 157.80 area also happens to be 61.8 fib. Anybody trading off a weekly will be watching. So that is that A-list area that I've mentioned to you. Now, on a daily, what would we look for a B list? Well, 15700, it's the weekly 55 EMA. It has been important support and resistance in the past, and it is a whole number, and therefore I will be interested looking at trades here. As I said, if price breaks and closes up on that monthly candle, the more aggressive amongst you may start looking for a pullback with a view to a long, and from a long perspective, from a forward order, I would actually go all the way back down to 153.30, because we have multiple reasons. We've got the 50% fib and we have the EMA, and this area was an area of support and resistance in the past few weeks. So pullbacks for longs and pullbacks down for shorts. Last week I said that I didn't fancy the Euro USD because of the fact it was so messy, and my A-list trade of the week was 9,500 for a short. As ever, I place my order 10 pips below, and this is a very good reason why, a good explanation. Often price doesn't quite get to the areas for whole numbers. For example, this one got up to 94.97. Therefore, if you placed your order at 9,500, you would have missed it by a fraction of a pip, and this went on to make 100. Equally, sometimes it will touch the line to the pip, but then the spread can be the difference. And I showed you a few weeks ago, I was taken out on the Aussie dollar yen by 1 pip, and it went to 800. It is highly frustrating, almost to the point of tears sometimes. So that was the trade of the week for me last week. Now this now is less clear this week. Last week, remember, we were all the way back down here, and I explained about watching 4-hour charts on this area. Then there was this huge news candle, but that was the area. Still of interest, but I would not place this now. I have nothing to do with this at the moment for a forward order. The main areas for the Swissy this week are to watch for reaction 9,500 and 9,400. 94 possible bounce up. I wouldn't short in the face of this lot. There's just too much in the way down here. And the other option is the 9,500 short down again here. Euro, I was just explaining, it's been very messy. This is the weekly chart. I am A-list interested to short anywhere around 13300. This monthly 55 will move down later this week, so we could be anywhere around 13300. We've also got this 200 EMA, and it was a previous fib, so lots of reasons why I am interested to short there. I'm not going to get involved down here because it's simply too messy. And last week, for example, you had, I was saying 130 was a possible bounce back up, but I didn't fancy it. We got these nasty spikes through. So had you decided to long here, you would have probably been taken out and suffered a loss. And at the minute, it's just bobbling along around here, and it's 50 pip range. I'm just not interested. I explained about gold recently and all the reasons why I continue to buy gold and silver. This is the weekly gold chart. This is an inside bar, which is supposedly a reversal candle. Price of gold is drifting back up, as with silver. And the main reason we look at those two is for clues for the Aussie dollar. And the Aussie dollar last week came down exactly to the pip of that 50% fib. Now, I had an order into long at 120, 10200 and missed the damn thing by a few pips. What would I be interested with here? Well, there are multiple options on this Aussie dollar. The main one, the biggie, is if we get a big run up on gold and Aussie dollar, I would definitely short at 105.70 with my stop just above 10600. And again, this is an A-list trade. And as you know, those who've been with us for a while, I think we've had 10 out of 11 winning trades on this pair going back to June last year. And with it being weekly charts, I do go in heavier on these. Other options, well, you have, watch this Bollinger Band at the market open. Last week it stayed open, which was a clue we might be on for a drop. If it closes, it would give me more confidence to actually long at 102, 170. But the other option here, if gold drops or the Aussie dollar drops, what I was saying is I would wait for a close below 101.80, which was the lows from the previous weeks. I would look for a close below there, then a pullback with a view to a short. So the either or trade is down here, which I would look at intraday. The biggie is up here. And a final option, let's go down to a daily. And this is the difference between whether you're trading off weekly and just placing orders at market open, or you're in the trenches and you're having a look intraday. What I'd said last week, an intraday trader would be interested in was a short at 103.40. And it bobbled around all week, and finally Thursday came up almost to the pip, and we moved back down again. So 103.40, anywhere around here, you've got all these EMAs rolling over, you've got that weekly 55 EMA, and it has been major support and resistance going back to the beginning of the year. So it is an important area, and therefore I will watch on a daily and a 4-hour chart for clues to short this one. And the reason I go down to 4-hour often is, for example here, it came up and touched it, but if you'd waited on a daily chart, it moved 100 plus pips by the time the candle closed. So in this instance, you go down to a 4-hour chart and you look for price to come along, pull back up to it, some kind of reversal candle, and then a view to a pullback down. Now, you may have missed it on here because this was a spinning top, and in actual fact it closed at 103.24, so you may not have missed it, but that's the kind of clue you're looking for. And particularly what you want to look for, pin bar reversal candles, tram tracks when you've got the Bollinger Band and then the support and resistance just above, and again these candlestick formations. So you're looking for clues all the time for potential trades back down if you are trading intraday. Euro pound, well, the euro pound last week we were looking for potential bounce up at 8,500, which we got, and then again in the forum I cautioned because of this British news. What happened is the British news came out better than expected. Bang, we got this major candle. And have a look at this on a weekly. That is a major engulfing candle. The whole of the body of this candle has engulfed the whole of the body of that candle, and therefore you are expecting a move down. And therefore what do you look for? Well, we're going to look for a pullback to 8,500. You've had a break of major support and resistance. We have double bottomed here. If it's going to stop anywhere, then 8,500. You've got the added benefit of the 55 EMA rolling over, and if we fib the recent high to the low, well, we've got 50% fib in the area. So there's lots going on. That is the area for me on the euro pound. As shown you earlier in the previous video, do not trade anything euro related when the interest rate news is due out, nor the ECB conference that goes on afterwards. The dollar yen. Now the dollar yen last week, I was looking for either a pullback, big pullback all the way down here, and if we get that 96.40, 96.50 area, I will long this pair. Not on Monday because of the bank holiday, however. Now the other thing is, some of you are asking me about taking shorts at the 100. Obviously the last few weeks it has worked. I don't do it. I don't do it because historically, over a period of time, trying to pick tops and bottoms has never worked for me, never been particularly successful. However, there were clues on this. You had candlestick patterns here at the top of the move. You got indecision. If you went down to a 4-hour, there were lots of candlestick formations, reversal candles. So it was a valid trade. It's just not something I choose to do. A A further point to note, we had MACD divergence on the daily chart, and if you knew what that means is when you look at the peak of this MACD histogram up here, it represents that candle there, and then the peak of this represents that candle there. So really that should be horizontal. MACD at this point should be equal. When you get this arrangement, this is known as MACD divergence, and it suggests that price is going to turn back down, which it did last week. So areas of interest, I'm interested to long 96.40. Some of you, the more aggressive amongst you, might want to be looking for shorts here. The final option is if we get a break and close, and I would wait for it on the daily, a break and close above 100, then I would be interested to long. Aussie dollar yen, messy. Again, I've explained in recent weeks why I wasn't going to long, because the fact that it's all the way up here. 100. Now the difficulty with this pair, a forward order, my A-list trade for the week is 97.40. This was major support and resistance going back to the beginning of the year. 100 was equally important support and resistance, but the last couple of weeks we've had some nasty spikes on this pair, and the danger here, it's going to come down, go all the way back down, maybe take you out, maybe come down to this 55, then bounce back up. So the areas I am more interested, place a forward order at 97.40. Intraday I will watch if we get a break all the way down here, and on a 4 hour at 100. Euro yen, similar scenario. We are back at 127. It just missed it on Friday. That was the major area. Now again, I'm a little bit wary with the euro at the moment. We've got MACD divergence on this pair as well. I'm not going to place a forward order at 127.00 for this pair. I'm going to leave this one alone. I would prefer the Aussie dollar yen or the dollar yen out of the three. Finally, the dear old CAD, all over the place at the moment. Horribly annoying often is the CAD. This is an inside bar, supposedly signifying a move back down. I'm only interested to long at the moment, and I'm waiting for a pullback all the way down here, anywhere around 10040. Now ideally I want to pull back to 100 parity. So what I will do with this, I will place a long just above parity, forward order, but I will be watching this area intraday. And the reason being is this is a 55 EMA on a weekly chart, and you can see how important it has been in the past for mobile support and resistance. Once again, there's big CAD news this week, and there's NFP Friday as well. Final part of the jigsaw for me is then to go and have a look at the calendar for the week ahead. I will not touch the yens on Monday because it's a Japanese bank holiday, as explained before. Monday and Tuesday are my main days this week, because as the week builds we start to get onto some real scary stuff. Wednesday being the bank holiday with a lot of traders missing from Europe, ADP non-farm employment news, and then the dreaded FOMC statement. Again, you can have hundreds of pips of movement, so that's going to make things very tricky. Thursday then is Euro interest rate news, and then the press conference, and the press conference often can do more damage than the actual minimum bid rate. And finally NFP Friday. So for me, Monday, Tuesday, early Wednesday, and then I expect to be out of the markets. Have a good week.